When talking about the world of cryptocurrency, it's always going to be interesting. After all, this is an emerging asset class with explosive potential. But over the past 30 days, things have been interesting in a different kind of way. While volatility has been on the rise in traditional markets, and while most major assets have been outperforming against the US dollar, this has not been the case for Bitcoin. When looking at performance in Bitcoin over the past 30 days, the crypto asset is trading lower against the buck, albeit marginally. Interestingly enough, the lack of volatility in Bitcoin has led to a surge in demand for exposure to the Ethereum blockchain, with Ether up over 8% against the buck as crypto investor appetite for attractive yield in the decentralized finance space explodes. We believe the persistent upside pressure in the world of global equities is helping this along, given Ether's higher correlation to risk-on flow. At the same time, we also believe there is far too much stress in the global financial markets to believe that the run in global equities will continue for much more before a massive capitulation event. The economic recovery outlook from the coronavirus is highly uncertain, while trade tension between the US and China continues to heat up. In our view, this suggests any outperformance we've been seeing in ETH relative to Bitcoin will not be sustained. But this doesn't mean we should be expecting Bitcoin to be trading much higher right now either. As was seen back in March, Bitcoin will still be exposed to periods of risk liquidation given its shorter correlation with risk assets. Right now, Bitcoin is still an emerging technology, and because of this, any downside pressure in global equities should translate to a period of Bitcoin weakness. And so if we do see a period of risk off, look for Bitcoin to fall, but also look for Ether to fall that much harder. In the crypto world, risk off should translate to a move back into a store of value as well, and Bitcoin is the clear store of value here. Technically speaking, Bitcoin's recovery out from the March low has stalled out ahead of the 2020 high from February, and while the market holds below 10,500, there is no reason to be expecting anything in the way of a bullish breakout. The key takeaway right now is that for Bitcoin, we still could see another big move to the downside before medium and longer term players step in to take advantage of Bitcoin's store of value proposition. We wouldn't rule out this translating to another drop back into the 4 to 6K range before Bitcoin is once again very well supported. And for ETH, with global sentiment running so high and stocks looking more and more exposed, we believe there is risk for another material decline in the months ahead as investors look for safer alternatives during an intense period of risk off. But overall, we remain very bullish on the crypto space and see any pullbacks in the months ahead as wonderful opportunities to take on exposure to assets in the world of the decentralized technology. Ultimately, the draw of investment in assets with limited supply at a time when the global economy has overinflated itself with unprecedented money printing is a draw that won't easily be ignored. That's all for now.